The United States was the world's biggest lender and trade engine. When it collapsed, credit froze worldwide. Banks in Europe failed. International trade dropped sharply. Commodity prices collapsed. Unemployment soared from America to Asia. The crisis triggered a global economic breakdown, but each region experienced it differently. Let's examine how today's top economies were affected. In the United States, bank failures and mass unemployment led to extreme hardship. Franklin Roosevelt's New Deal introduced public works, banking reforms, and social support. The economy recovered only fully during World War II. China in 1929 was politically divided and largely agricultural. The Depression lowered foreign demand, but internal conflicts mattered more, including civil war and Japanese invasion. This period contributed to the eventual communist victory in 1949. Japan faced declining exports. Leaders responded by pursuing military expansion, beginning with Manchuria in 1931. This shift shaped its path to the Second World War, and later U.S.-supported Reconstruction made it a modern industrial power. Germany relied on American loans after World War I. When credit dried up, banks failed, and unemployment soared. Economic despair fueled the rise of Adolf Hitler and the Nazi regime, setting the stage for another global conflict.